The cryptocurrency markets are kind of an interesting time right now. There's still a lot of fear in the market. A lot of people are in this kind of disbelief phase, like, oh, this rally's going to fail just like all of the others. But the charts are telling a very interesting story right now. I'm going to be sharing that with you in today's video. Also, some massive news coming out of Asia, big news coming out of Europe. So make sure to stick around to the end of the video to get all of the goods. I'm Lark. Every day I make videos talking about cryptocurrency investing. If you like that topic and want to stay updated with some crypto, make sure to whack on that thumbs up button to let me and the YouTube algorithm know that you do indeed like this kind of stuff. By the way, if you're a cryptocurrency trader, you need yourself an account over at BYBIT. Right now they're running a crazy promotion. If you sign up using the link down below, make a trade of any value, and the first 100 people to do that will get 0.2 Solana credited to their account. 5 people will also win a whole gosh darn Solana. And in addition to that, you're going to get 30% off your fees and be eligible for up to $4,100 in trading bonuses. So check that out using the first link in the description. Now, let's go ahead and get into this. So, right now, Bitcoin has had a nice little bounce off of the 50-day moving average. That, of course, is nice to see that sentiment did pick up. Now, from a technical perspective, and you could, of course, just draw a line across here to the horizontal resistance support lines as well. But let's just use the 50-day moving average. We did have a nice little breakout, come back down, retested that, surging higher. Now we are coming up to a very, very important line of price resistance. You can see this is acting as price resistance right here around $45,500. It was support previously, support which obviously failed. Now we are seeing that once was support, now acting as a line of resistance. That's our line to beat right now. If we beat that line, could be off to the races for crypto. Holding above 50-day moving average, coming up on a major line of resistance, feeling generally good about the cryptocurrency markets at the moment. We also have this happening, which I think is a very, very interesting thing to take note of. Bitcoin right now is forming an inverse head and shoulders pattern. Now, this is not a valid inverse head and shoulders until we break the orange line. You can see that right here. Now that would bring us up to around $46,000 in order to peak over the top of this line, which of course happens to coincide exactly where the resistance is that we were just talking about in the previous chart. Very important area right now for Bitcoin to beat. If we break out and we consider this a valid inverse head and shoulders pattern, guess where the target is? The breakout target for this pattern is over $60,000. It doesn't take us back up to new all-time highs, but it does take us through the $50,000 range right up to $60K. Whether or not we actually get such an ambitious breakout target from this pattern remains to be seen, but definitely some interesting food for thought. Now, what's also very, very interesting is Ethereum looking pretty gosh darn similar. We are also seeing an inverse head and shoulders pattern forming up here on Ethereum. You can see we are very close to the orange line, which would validate the inverse head and shoulders pattern. Again, we have got to close over that. If we don't close over the orange lines in either of these cases, it is not a valid inverse head and shoulders pattern. And we'll move on to the next, talking about the next thing, basically. But if we do close over that, if we get the price action to rally up and get us just above there, and it's very close for Ethereum, very close for Ethereum, then that actually brings us up to retarget the all-time high at $5,000. That's the breakout target for this inverse head and shoulders pattern right here. That's a very exciting and ambitious target, if you ask me. Now, this is a very interesting thing, because together, Bitcoin and Ethereum constitute just these two assets, not even counting all the stuff that's built on top of Ethereum, but just these two assets account for 58% of the entire cryptocurrency market cap. Both of them are forming up a bullish chart pattern. Has not been validated yet, but if they do break out, what do you think that means for the rest of the cryptocurrency market? If Bitcoin and Ethereum start pumping, everything is gonna pump. And look, maybe Bitcoin will have its little moment in the sun where it just pumps like crazy and leaves altcoins behind for a little bit. That happens. That does happen in crypto. The altcoins will catch up. They always do, and they will moon like freaking crazy in this scenario. So this is what I'm watching right now. Obviously, I'll keep you up to date over the next few days how this is all going. Hopefully, we do see the closes happening above that orange line. It's our make it or break it line right now, guys. So hopefully, we do see that happening. Also, well, that's the backdrop from a technical analysis perspective. On-chain data also showing some very interesting things. Bitcoin still flowing off of centralized exchanges. So ever since the price has been rebounding from 33K, buyers have been stepping up. A lot of people apparently think probably was the bottom. Time to get back on the Bitcoin train. Time to be accumulating. Time to be grabbing Bitcoin, taking it off exchanges, dumping it in my hardware wallet, waiting for the inevitable $1 million price run. You see right here, lots of Bitcoin currently moving out of exchanges. That is a good sign. It means that buyers are still very interested. And of course, you can see we tend to have buyers stepping in during these heavy accumulation periods, and people will be selling when we get back to higher price zones. Now, let's talk about the big news of the week. So this came out 2 days ago that DBS is planning to launch retail digital asset trading desk by the end of the year. Now, DBS, big deal in Southeast Asia. It's one of the biggest banks in Singapore, big Southeast Asian bank. These guys have been offering institutional and private clients access to cryptocurrencies. Well, they are now expanding that out to their retail customers, which is exactly what I said was going to happen back when they rolled out their service for only their rich customers first. They test it there. They let the rich guys play around with it first, see how the system works, and then they release it to their millions of customers. This is great news. Every single bank that we get on board is good news, and getting a big bank like DBS on board is great news. So this is really, really good to see, to be honest. And keeping it real, guys, every bank is going to have to offer some kind of crypto service. Any bank in, let's say by 2030, that is not offering crypto-related services is going to get blockbustered. They're simply not going to be able to compete in an environment where all these other banks are offering what people want, which is crypto. There you go. It's just that simple. Final news story for today. Fidelity is entering the crypto space in Europe with Europe's cheapest Bitcoin ETP. This is a spot Bitcoin ETP, by the way. Now, look, Europe's had crypto ETPs for a while. It's nice to see Fidelity entering the European ETP market. This is a product very similar to an ETF product. Basically, you buy the ETP, you get access to spot Bitcoin. It's pretty cool. This is obviously what the market wants. These products have been very popular. I was looking at the Canadian one the other day. They're up to like 60,000 Bitcoin or something between the three of them that they've got locked up between these spot Bitcoin ETFs. People want spot Bitcoin products. And that's exactly what Fidelity is doing here over in Europe, because they're not allowed to do it in the USA. America keeps denying spot Bitcoin applications. It's just scandalous at this point. The SEC is such a bad actor in the USA. It's crazy. In America, you can take your entire life savings down to the casino or down to the lottery. No one's going to ask a question. No one's going to stop you. You want to earn interest on your crypto? Nope. BlockFi just got a big fine for that. You want to buy a spot Bitcoin ETF? Nah, it's too dangerous. You're better off trading futures. That's literally what the SEC says. Spot Bitcoin's too dangerous. You should trade futures instead, which is what they gave people. You're not allowed to invest in token sales either, or allowed to trade on leverage. It's nuts. It's nuts. Anyway, Fidelity just had their Bitcoin ETF application denied in the US. I think that happened a week or two ago. Of course, we'll see them come back and try again, but it's just redonkulous at this point. Every other country innovating, every other country out ahead in the regulatory game. The Fidelity Bitcoin ETP will be listed on Deutsche Börse and the Frankfurt Stock Exchange, coming soon to the SIX Swiss Exchange as well. Very, very cool. It's spreading, guys. More and more people are getting access to crypto products. Every time we get like a listing on a stock exchange with an ETP or an ETF product or an ETN product, it's a big deal because it means that more people get access to crypto, because those people sitting on, the Frankfurt Stock Exchange, they're not necessarily going over to Coinbase and buying Bitcoin. But when it gets listed on their local stock exchange and they can buy it via their local brokerage account, then they become interested. We had a report that came out a few months ago, and a huge amount of investors basically said they're interested in buying Bitcoin, but they're not going to do it until they get a spot Bitcoin ETF. That was out of the US, that particular report came. The demand is there, just needs to be met. Anyway, just my 2 Satoshis for the day. Let me know what you think about any of this news down below in the comment section. Thank you so much for watching, and peace out till next time.